Are you with me is Ankita Saxena, and this is a show where we take you through all the stocks that are buzzing in trade today. And Ankita, let's get started with first how the markets are doing today.
Yes, absolutely, Ashish. There's no much action that's coming in the market, though we have now at this juncture managed to scale this 25,000 levels on Nifty that we have been flirting with for a while now. But we have scaled those levels, but it's a wait and watch whether we'll be able to sustain those levels, because we did touch that level in the morning also, but we gave up those gains. So now we are first at 25,000 on the Nifty. On Nifty Bank, we are trading upwards of, we are trading with gains of 153 odd points, 2% gain coming on Nifty Bank as well. As far as the broader markets are concerned, they have turned red. They're very, very flat right now, have slipped into the red territory. Mid caps trading with cuts of 0.01% and some small caps also trading with cuts of 0.02%. So very flat moves coming in on the broader market, and they have turned red. The small cap in fact has turned absolutely flat right now. So that's how the move is coming in. As far as the sector is concerned, we have energy that is really powering away in trade. In fact, that is trading with gains of 1%. Most of the constituents from the oil and gas and power sector are trading in the green. We have NLC India, NHPC, GAIL, BHEL. We also have Oil India, IGL, Adani Green. These are all the counters that are buzzing in trade, trading upwards of 1.5 to 2%. So that's the area that is doing pretty well for itself. As of now, advanced decline ratio breadth has become very even. So basically right now it is a lackluster day coming in, very range bound trade, but very stock specific moves are coming in, and the energy sector doing very well for itself.
Indeed. So let's get started with all the stocks that are buzzing in trade. On the technical side, we are now joined by Ashish Kyal, founder and CEO at JS Strategy Advisors. From the research desk, as always, Kanishka and Ravinder are now joining us. First up, let's talk about Trent. This is in focus on the back of an antique report where they are maintaining their buy stance on Trent with a target price of 7031. The stock currently trades at 5,170 odd levels. They say that the company is targeting a consumer niche, which is Gen Z, through its new format, Burns Toast. And the company continues to focus on their expansion plans as well. They say Trent has been a pioneer in identifying opportunities in fresh and affordable fashion through Westside and Studio in their respective target price range. The challenge, of course, will be in scaling through their niche category, but they continue to have a buy stance on the stock. 7,031 is the target price, and Trent is in focus on the back of this antique report.
And well, Trent is currently trading at 0.4%. But let's come to you, Ashish. You said that Indian Oil Corporation for us, IOC on the charts. Tell us, what do you see on the charts for this particular counter? Today itself, it is like I mentioned, the entire oil and gas and energy space is buzzing. It's up and away 2% in trade today.
Hi, afternoon to you and all the viewers. If you look at IOC, the stock has formed a double bottom pattern near the levels of 136.50. From there, it has managed to bounce back and now breaking the neckline. So the overall undertone and the pattern is positive for the stock. We can expect it to move towards the level of 152 on the upside, which is the previous swing high. And on the downside, one can maintain a stop loss of 141 levels.
Alright, so that's IOC on the chart. But moving on to the next counter that is in focus, and that's Dr. Reddy's lab that has informed the bourses that it has entered into a definitive agreement with Janssen Pharmaceutica, an affiliate of Johnson & Johnson, to acquire Stugeron and its locally recognized brands Stugeron Forte and Stugeron Plus for $50.5 million. The deal spans 18 markets across APAC and EMEA regions, with India and Vietnam identified as the key markets. Now, Stugeron contains cinizarine, an antihistamine indicated for the treatment of vestibular disturbances and vertigo. On the back of this, Dr. Reddy's is in focus. It has picked up from the lowest point of the day, but nonetheless is trading in the red with cuts of 0.3%.
Okay, so that's Dr. Reddy's lab for you. But GAIL, this counter is also in focus. Ravinder, tell us. I believe there is a Nomura report on this, and the stock is also buzzing on the back of that.
Well, yes, GAIL is in focus. The Nomura has come out with a note, and they have maintained the buy rating with target price of rupees 225 as compared to earlier target price of rupees 235. This is that GAIL has submitted a request to the PNGRB for a tariff increase of approximately 33% to rupees 78 per MMBTU on the tariff, and the tariff is revised every 3 years, and last revision to INR 58.59 per MMBTU went into effect on April 1, 2023, and the higher cost of substitute gas consumed by compressor in pipeline operation capacity determination of GAIL's integrated pipeline by PNGRB has come out with lower than the regulator's previous estimate, and the integrated tariff hike above 20% could be a positive surprise for the company, and petrochemical segment could recover from FY27 onwards, and PNGRB regulates tariff, sets standards, and authorizes pipelines to ensure efficient gas market. So back of this positive note, GAIL is in focus, and the stock is up approximately 3%.
Alright, so that's GAIL on the back of that brokerage note coming in. Ashish, you picked out Siemens for us. Tell us what do you see for Siemens on the chart?
See, if you look at Siemens, the overall undertone for the stock has been positive. You can clearly see the stock has consolidated and now getting ready to give a breakout. The volumes have started picking up, and I think the range bond, it formed a triangle pattern which can be a continuation, and we should start seeing a positive move. So the upside target for Siemens can be expected around 3350 levels as per the pattern target, and on the downside one can maintain a stop loss of around 3140 levels.
Okay, so 3140, that's the stop loss that you should maintain on Siemens. But let's also put the spotlight on Coal India. Tanushka, the stock is holding up with gains of nearly 0.5% as we speak. But tell us, what is the news here?
That's right. Coal India is holding up despite that price target cut coming from Motilal Oswal. The company, the brokerage has cut its target price on Coal India to 450 rupees from 480 rupees earlier. It has maintained its buy call though. Now the brokerage believes that there could be some pressure on the company's earnings in FY26. This would be dragged by muted power demand, limited volume growth, and rise of supply from captive and merchant miners. Now, adding to the pressure as per the brokerage is subdued global coal prices that are capping e-auction realizations and also demand. Motilal Oswal has also trimmed its FY26 and 27 revenue and EBITDA estimates for Coal India by up to 9%, and it now expects just 2 to 4% CAGR in volumes over the next 2 years. And the key takeaway from the brokerage note is that while the near-term headwinds remain, the long-term outlook, that is the long-term dominance in thermal power, that is expected to stay intact for Coal India. So that's the reason why the stock is up and holding up about half a percent.
Okay, so that's Coal India for you. But let's also put the spotlight on Mazagon then, and positive news flow coming in for this defense company, where the company has now informed the exchanges that they have commenced contractual obligations and negotiations with Indian Navy. This is for the submarine project, which the company was denying earlier. In fact, the company earlier said that they have not had any discussions with the Indian Navy since January, when they spoke to us earlier a few days ago. But now the company has officially informed the exchanges that they are in negotiations with the Indian Navy. On the back of this, Antique has come out with a report. They believe that this is a big catalyst, positive catalyst for the stock. They say given the government's focus on reducing ordering timelines, they expect the order to be placed in FY26, which provides good revenue visibility for the company in the medium term. The order pipeline for the company continues to remain robust, and the company expects to receive orders in the next few months. So they are maintaining their buy stance. 3858 is the target price, and Mazagon in focus on the back of this.
Right, Mazagon is in focus on the back of that news flow. But let's move on to the technicals then. Ashish, PNB is what you picked out for us. PNB again a stock that's doing decent today. It's trading upwards of 1.5%. What do you see in the charts? Last 6 months also it has given it's given good returns of almost 22.5%. From here on, do you see this positive momentum to continue? It is hovering around actually its 52-week high, towards its 52-week high. Do you see more upside to it?
Yes, if you look at PNB, I think there is a possibility the stock can further rally from here on, and we can clearly see the banking index, the bank nifty has just started to reverse back on the upside after a long underperformance. So having said that, the PSU bank should also contribute to the rise, and PNB can reach towards the level of around 113 on the upside, and one can maintain a stop loss for the stock at 104 levels.
Okay, so that's PNB for you. The stock is holding up in an otherwise tepid market. But let's also put the spotlight on M&M then, and let's take a look at how the stock is performing. Remember, auto stocks have been in focus for the last several trading sessions, especially on the back of this GST cut announcement, where GST on EVs has been retained at 5%. For luxury goods, it will be taxed at about 40%. But we also have, Ankita, several other stocks that continue to remain in focus. Understood. Okay, so let's also go across and talk to the management of M&M. Shrishti, in fact, caught up with the management of M&M to talk about, at the CM conference, to talk about M&M's auto division and what the outlook is going forward. Let's go across and listen in.
The GST reforms has been an important step for not just the industry, for the overall economy. And this is something the government was focused on benefiting the customer. And when we looked at the overall scheme, we saw that it actually has positive impact across our portfolio. Almost 60% of our portfolio, which are larger vehicles, we have a benefit from 48% or so coming down to 40%. And the rest of the portfolio, smaller vehicles, we have the benefit from 31, 28% all the way to 18%. So we felt that if the government is intent on passing this kind of benefit to the customers, why do we wait till festive? Why don't we get the excitement going ahead of time? And that's the reason why we announced it, that from 6th onwards, you could benefit, and so that the customer doesn't have to wait for getting the benefit overall. And it's been received very well, and we've had good traction in terms of walk-ins and inquiries at our showrooms.
Indeed, but Nalini, we do know about the high waiting periods for some of your most loved cars. But with respect to the dealer's interest, there's a compensation cess factor that is still remaining to be a challenge for them. But some experts do believe that this kind of a price cut that you have taken already and started adjusting your prices with respect to the GST cut, in a way, you will also participate in that and you will also take that share. If you can help us understand how much of the price cut that has been announced before that 22nd September date, how much will you be absorbing that versus the dealers in order to liquidate the inventory which still has that compensation cess factor?
Yeah, firstly, on the waiting periods, over the last 12 months, we have actually significantly increased our production capacities for both the in-demand models on 3X on Thar Rock. So you'd be happy to note that actually the waiting periods have come down, and anybody who's looking for vehicles for festive period, they'll be able to get the vehicles as well across the portfolio. Now, coming to the cess issue, obviously it's a significant challenge for the entire industry, and the numbers thrown around 2,500 crores. So it could be higher than that, depending on how the retails happen till 22nd. It's an issue with the industry has taken up with the government, both from SIAM perspective as well as FADA perspective. And I'm aware that the government is looking at it closely. So we are hoping to see some kind of positive resolution from the government. From our end, what we have done is with the schemes we have put out so far, what we have announced till 22nd September, that should help our dealers at least start to clear some part of the inventory as well. So beyond that, hard to predict how the things will pan out. And like I said, we have made a representation of the government and waiting for some kind of direction from there.
All right, but along with that, after that price cut, we have already seen that excitement in some of these autos counters on stock market and especially M&M. But what about the on-ground situation? What sort of a trend are you seeing in numbers of bookings in terms of the footfall? Has there been a visible pickup across your model?
Yeah, again, it's very early to talk about retail and bookings itself, but what we have definitely seen is quite a bit of excitement in terms of walk-ins in our showrooms. Also in terms of inquiries, we're starting to see that. Now, again, it's very early to see how much of that would translate into actual festive bookings, but we are quite optimistic. We had put out a mid to high teens growth, volume growth for the year from M&M perspective, and we are hopeful and we are confident that we'll be able to meet these numbers thanks to the GST reforms as well.
Well, indeed, but Nalnikant, Mahindra is known and has a track record of setting the headline numbers on the day of launch dates, the booking dates. So this time, are we looking for another record-breaking booking or delivery figure this festive season? Maybe even on the day, one of those days during Navratras or Dussehra or 22nd September itself?
Well, I'm waiting with bated breath as you are, so we'll see how the festive season pays out. But actually, even beyond the festive season, we have launches planned beyond that as well. So quite some excitement in store for the consumers for the rest of the year.
To us about the upcoming launches, which categories will it cater to, and where do you see the excitement coming?
Yeah, no, absolutely. So we have launches across both our ICE and EV portfolio. There are a couple of major launches coming up on the ICE later part of the year, and I followed up with a couple of ICE launches coming up as well. So again, these are products which have a lot of anticipation, and we feel that we have put together a very strong package together, and excited to bring it to the market soon.
All right, but along with that, now finally, when we have did discuss about all the factors with respect to the GST cut benefit and what could be in store for the customers, what are the other big levers that the Mahindra is working on, whether in terms of capacity, product pipeline or exports, to keep the demand momentum strong in FY26? What are the plans there?
Yeah, one of the fundamental beliefs we have within the company is the customer excitement comes from the kind of portfolio you put out there. And as you know that we've always put out exciting products. 15th August, we put out the new IQ platform, which would be the underpinning for our next set of vehicles over the next 3 to 5 years. And as part of that, we are adding about 20,000 per month capacity to 40,000 per year within our Chakan factory as a brownfield. And beyond that, we are also scouting for locations on the greenfield location for the next wave of volume expansion to happen as well.
All right, moving on then to all the stocks that are in focus today. The counters that are in focus are the OMCs as well, on the back of a note that Citi has come out with. Now, Citi's OMCs stocks are experiencing conflicting market forces according to Citi, and the positives are being obscured by perceived negatives. They also feel that they are in bullish about the camp, recognizing several undeniable trends that persist within the sector. They see robust earnings momentum and sustained government support and attractive dividend yields for these counters. Market sentiment is being weighed down by concerns over Russian crude imports and potential fuel cuts and excise duty hikes. But the recent share price declines present a compelling entry point for all the investors. They remain constructive on HPCL, BPCL and IOCL, favoring them over their upstream counterparts. IOCL, they're maintaining a buy with a target price of 190 rupees. For BPCL, also they're maintaining a buy call with a target price of 440. And for HPCL, also they're maintaining a buy call with a target price of 530. On the back of that, the entire OMC pack is in focus today. And currently, HPCL trading upwards of 6%, BPCL is up 3.3%, and IOC is trading with gains of more than 2.5% on the back of that.
Indeed, and crude prices also have inched higher, so several oil marketing companies continue to remain in focus on the back of that. But let's also put the spotlight on Jupiter Wagons then. Ravinder, I believe this is on the back of an order win, and the stock is up almost 3%.
Well, it's on the back of order win, Jupiter Wagon is in focus. The company has received a letter of acceptance from Ministry of Railways, and the LOA pretends to a supply of total 9,000 LHB axle for FI80 IR bogies with an aggregate order value of approximately 113 crore. And if we look about the order book of the company as of June 30, 2025, company's total order book stand at 5,972 crore. So back of this order win, Jupiter Wagon is in focus, and the stock is up more than 3%.
Right, Jupiter Wagon is in focus on the back of the big order win, trading upwards of 3%. Ashish, you picked up Axis Bank for us. Tell us on the chart, what do you see for Axis?
See, as I said, the overall banking space looks to be turning back on the upside, and we can clearly see both the private and the public sector banks have started showing some green shoots now. So Axis Bank can be a very good opportunity from a reversal perspective. Stock has reversed from an important price action support area. On the upside, we can expect it to move towards the gap area, which was created a month and a half back, towards around the level of 1150 as the target. On the downside, one can maintain a stop loss for the stock at around 1060.
Okay, so that's the word coming in on Axis Bank. But let's also put the spotlight on some other stories that are coming in. And in an insightful conversation, Kailash Kulkarni, CEO of HSBC Mutual Fund, joins a panel of experts to explore how Indians are shifting from traditional real estate investments to the flexibility, liquidity and diversification that mutual funds provide. The panel also shares real-life stories of investors who turned from real estate to mutual funds after realizing the limitations of property investments. Let's listen into a slice of that conversation.
HSBC Mutual Fund presents Informed Investing Season 2, partnered by ET Now, explores the evolving mindsets of investors shifting from traditional real estate to modern goal-based mutual funds investing.
आजकल अब आप जब घर खरीदने जाते हो तो कभी बिल्डर की क्वालिटी आपके जहन में आती है, कभी जगह की एप्रिसिएशन आपके सवाल में आती है, लेकिन व्हेन यू आर इन्वेस्टिंग इन म्यूचुअल फंड्स, मैं थोड़ा सा कंपैरिजन सवाल पूछती हूँ आपसे. रेगुलेटर अपने आप में बहुत मुस्तैद है, बहुत आगे आता है, हमेशा आगे आ जाता है. रिटर्न्स भी अगर आप बने रहेंगे तो ज्यादा ही कमाएंगे. कैसे आप कंपैरिजन बताएंगे इसका?
मेरे एक क्लाइंट हैं, वो रियल एस्टेट में इन्वेस्टमेंट कर रहे थे 2008 से, और आज वो मेरे पास आए, वो कह रहे हैं मेरे पास 8 प्रॉपर्टीज हैं, ऑल लिटिगेशन में. अब उनको पता चल रहा है कि यार यहाँ पर लिक्विडिटी भी है, सेफ्टी भी है, रिटर्न्स भी हैं, और जहां हम जा रहे थे वहां तो कुछ भी नहीं है.
People are slowly but steadily either not investing more money into real estate, especially after the COVID. We have started seeing people liquidating such assets and using that money to invest it more smartly. So they may not be taking full risk and putting it in equity mutual funds. They may be wanting to put into hybrid category.
People have, had a 10-15 year investment history. They've seen various cycles. They have also realized the value which is coming by investing into financial assets vis-a-vis being more leveraged towards real estate.
The younger generations are very much attracted towards fraction holding of the real estate. So if somebody is looking at a risk adjusted return, probably the REITs might score.
पैसा लगा